This is Jabari Long with another episode of the Long Report. Today I have Letitia Moore of the Letitia Moore Agency, Insurance Agency, and we're going to talk about protecting what matters most. How you doing, Letitia?
I'm great. Thanks for having me. I'm a licensed insurance agent, and I love doing what I do, helping people, educating people, and so that's what I'm here to talk about.
Okay. So home, auto, life, and business, you insure it all, huh?
That's correct.
You know, one thing about insurance, people hate paying for insurance premiums, right? But they love and are assured of the fact that they have insurance when something bad happens, right?
Absolutely. I think, Chris, I believe it was Chris Rock that told the joke about, people having insurance in case something happens. He used some explicit language, but, and that's exactly what it is. Just being protected if something happens, whether it's catastrophic or not, just being assured that you can have your items, your assets taken care of, makes people feel warm and fuzzy, for sure.
Yeah, absolutely. So let's talk about you and your history. I see you've been in the insurance industry in the space over 20 years.
Yeah, I started doing insurance right out of college. Wasn't initially what I set my goal to become, but I did it. And after working in the degree that I studied in, I found I didn't like it. And so I went back to insurance because one thing that I've always loved to do is to educate and help people. I have a heart of serving others, and so I knew that's what I was doing in doing insurance. And so I've had the opportunity to work as an independent agent, as a captive agent, and I've even had the opportunity to quote in all 50 states. And it's all the same, whether it's high net worth insurance, middle market insurance, it's all the same. It's protecting, it's helping, and it's educating consumers.
Okay. All right. So let's talk about the, I know, whenever you get insurance quotes and people call me and they're always trying to do bundle packages, right? And they say, well, you get discounts if you can add this or you can add that. So let's talk about, looking to capture that homeowners or that clients, all of their policies under one umbrella and the discounts that can be offered.
Yeah, that's a great question. So essentially, insurance carriers have made that bundle discounts one of their highest discounts, especially when it comes to personal lines, which is going to be your home and auto. So anytime you're getting a quote, you definitely want to try to get your home, condo, renters, and your auto bundled together. It's going to give you a big discount, and give you some savings. The other thing is that also gives you discounts is life insurance with the same carrier. Same thing, it'll give you a discount. Just depending on the carrier, maybe that discount is not as high as a home discount with your auto, but it's a discount nonetheless. And the same with the business insurance. If you can get your general liability policy or business owner's policy with that carrier, it'll also give you a discount. Just another way for carriers to let you know, if you give it all to us, we're going to, apply a savings. That's essentially what they're doing. In some cases, there's even, I'm able to provide a discount, even if it's just control business. I'm a farmer's agent. I do have other carriers that are offer. And sometimes those carriers will say, well, if you have their auto, we'll still let you apply a discount. So it works hand in hand, and it's just a way to keep customers coming back and providing additional savings. That's really what it is, and that's what the industry has moved towards, and what they'll continue to do for sure.
Okay, definitely can understand that. You get some sort of savings or reduction in price for your commitment.
Yes. Yes.
That's a big thing. So let's talk about home ownership or homeowners policies, home insurance basics. I know you got something called replacement cost policies versus just a regular dwelling, a certain amount of dwelling coverage. Talk to us a little bit about the difference with that.
Yeah, absolutely. So when it comes to homeowners, what insurance is doing, they are literally protecting you in the case something happens and you had a total loss on your home. Whether it's, fire damage, whatever it is. If that home had a fire and it was totally lost, what they look at is that replacement cost that they've calculated to say this is how much it would take to rebuild that home back to its kind-like quality. Meaning, if you have a 2-story home and you have replacement costs to replace it, they have to build you a 2-story home, not a 1-story home. So that's why you absolutely want replacement, because it's going to give you your home back at 2,000 square feet that you had. There are other options where they look at the home and say, well, based on the market value of your home and what the replacement cost is for your home, we're unable to allow you to have a home for replacement costs. So basically what that means is your home market value is so low compared to the replacement costs, they don't want someone to feel like they would do insurance fraud, because you would absolutely get more for your home that you could on the general market. So that's why oftentimes people will see, or, they realize I don't have replacement costs, and they have something called actual cash value, meaning they're going to give you the value that's stated on your declaration page for your home. It may not be enough to rebuild the home back to kind-like quality. So that's in that case, if you have a 2-story home and you're on actual cash value, you might only get that 1-story home, unfortunately. But it truly is one of the things that sets a replacement cost policy apart from an actual cash value policy, is because of the value in it. You can replace that home versus you just got enough, maybe to sell it, to sell the land, really, because they'll tear the house down and it's just the land. It's not enough to rebuild the home back to kind-like quality.
Well, let me ask you a question, Letitia. So you got the replacement cost, you got the actual cash value, but can they insure for another amount? So I just want $50,000 worth of dwelling. Is that an option, or?
So for standard insurance companies, you typically do not have that option. You don't have the option to just say, hey, I want to insure it for this amount. To do that, you have to go outside of those standard markets in order to do that. And then typically when you're doing that, you're looking at what they call like a dwelling fire, where they're covering the home for fire. You really have to understand exactly what the coverages are that they're going to cover the home for, because if it's just fire and there's a tornado, then maybe the home's not covered. So that's something that can happen when you go outside of standard markets. Typically, most people who go outside of standard markets, it might be for an investment home. But don't get me wrong, because again, I've had experience of quoting in all 50 states. There are states that are coastal where having a non-standard home policy is normal because of the conditions that they face in those areas.
Gotcha. So if you're on the side of the ocean, the standard carrier, if they do cover it, might not even be affordable because of the cost associated with it.
Correct. Or just based on where you are, you may not be eligible. So you have to go to a non-standard market, especially, like I said, especially on the coast, those coastal areas, it's all the time. It's, just something that would happen, and, they're used to it. But moving to those locations and you're not used to that, it can be a rude awakening.
Yeah, so this insurance industry is it's a lot of terms and a lot of what I like to call nomenclature that the average person doesn't understand. So you talk about standard coverages versus non-standard coverage. I would guess that probably 50% of Americans are unsure of how they're covered and what's included and what's not, because you got all these other terms like different perils and exclusions and this rider, that rider. It's so complex that it's really meant to be something that the average person is not going to thoroughly understand, even if they even if they have a small bit of knowledge. So, do you review those policies, educate before you even quote, or simultaneously when you're quoting a potential client, to show them what they have, what you're offering, and what may be excluded in their current policy that they thought was included?
Yeah, that's definitely part of the insurance review that I provide. I look at what they currently are covered for, or even if they're buying this home brand new, and I go through and talk about those things. One of the things that they do in the insurance industry is there's always an inspection. So especially with someone who is, newly buying the property, they're not as in tune as to the different things regarding the property because it's new and they haven't moved in yet. And so a lot of times I may ask them for their appraisal, because there are things such as simple as having a shed, a detached garage, or even a deck that matters when you are calculating that replacement cost or that actual cash value. That if you like your deck and you want to make sure you continue to have a deck if something happens, then don't omit not saying that you have a deck. So that's why it's important. And like I said, someone's buying a house, they may not really realize that, but it is. Every piece of property on that land, attached, unattached, makes a difference. Even if you have pavers walking out to your beautiful garden in the back, those pavers are part of your policy. And a lot of times people just skim over that. So yes, I talk to customers about that. I try to get a visual picture if I can't see a picture of what's going on. I also talk to them about what's important to them. I had someone tell me that it wasn't important to them to have liability coverage. It should be, but it wasn't. And that was them. Like, I saw their deck pages and I saw they had lower limits of liability. And so I questioned it. And that's what they told me. And I was shocked because that's the first time I had someone who told me they weren't concerned about liability.
So we talk about dwelling coverage and personal property and liability. Explain to us a little bit about which each coverage means. Like the liability you just mentioned, that means
Yes.
if somebody slips and falls on their property, then that's what cover that person's medical expenses and then
Yeah, so not only, and I think sometimes people have to remember, someone can slip and fall that wasn't invited to your property, and your policy would still pay out on that. It doesn't have to be someone that, is just over, you're having a little get together and they slip in the house, on some water on the floor. It could literally be someone crossing your yard and slips and falls, and they can put a claim against your homeowner's policy. And so, yes, it protects you from having not to pay out of your pocket for those damages, that they may have incurred. That's what liability is going to protect you for. Liability can also protect you if your child threw a ball and bust someone's window. It could protect you for that. Hopefully you could pay it out your pocket. You don't have to go against your insurance policy, but those types of things can happen. When it comes to personal property is literally everything that you bring into a home, an apartment, a condo. It is your clothing, your furniture, your personal belongings that you would pick up and take out. That is what personal property is. On average, most home policies want to protect 40% of your personal property. That's like the minimum coverage. And it's 40% of the dwelling limit, which is typically your replacement cost. Now, you can have 50%, you can have 70%, you can go as high as you need to, but on average, that's what they give you. So a lot of times, an insurance agent won't say to you, well, how much do you think your personal property is worth? They'll just let the system calculate it. I don't know that you have, Italian leather that you've flown in from Italy. So 40% is not going to probably take care of that if we're just talking about the Italian leather and your clothing and all those good things. So, be mindful of what your possessions are worth. So I touched on replacement or dwelling limit, personal property, as well as liability. I think the other thing people should think about is the deductible. The only reason why I say that is because oftentimes people are like, oh, I just go with a $1,000 deductible. And that's great. That's fine. But realistically, on your home, if you had a claim, would you really make a claim for $2,000? I think, and that's the question I like to ask people. And a lot of times they're like, well, no, that's too low. So then maybe you should increase your deductible. The higher the deductible, the lower the premium. It can help with pricing, but you have to be mindful. Yeah, if something really happens, you are going to have to pay that deductible out your pocket. But just something to think about. A lot of people have $1,000 deductible and they'll never make a claim unless, the loss is over $5,000 or $10,000 on their home. So why are you carrying such a low deductible? So those are the types of questions we have, and I make people aware, and we just talk about their needs. Because some people will say, I don't care what it is. That's all I can afford is $1,000 deductible. Then we're going to keep it at $1,000. But a lot of times they're not even having those conversations when their insurance is being reviewed.
Yeah. I can see that with a lot of people. There's just a whole lot of unknowns, like you say. If we're talking about a property, the likelihood that $1,000 causes you to file a claim is going to be low. Now, if a tree falls and hits your house, and now the roof has to be, structural damage repaired, things of that nature, that's when you get the insurance companies involved. So definitely speaking to the agent and having those conversations, hopefully put some more money back in people's pockets if they're willing to listen, because ultimately that's what you're trying to do, give them the most amount of coverage for the least amount of money and premium costs.
Correct. Because I get it. Just because I'm an insurance agency owner, I don't get any breaks on my insurance either. So I get it.
No, they don't just give you all this stuff for free to dwell in the personal property?
Oh, no. I pay too, just like everyone else. And, it is about, I know people talk about the rates being so high, and they're so high, and I get it. And it is, unfortunately, based on what's happening in those areas. So they look at all the claims that have been filed. And then based on, claims and activity, that's how rates are driven, and they'll continue to be driven that way unless somehow, someone comes up with some other way to, give us rates. But at this time, that's what they look at. They look at what's going on, and based on that particular zip code you're in, it's going to determine the rates that are being offered for you at that time.
So let's talk about this homeowner policy. I used to hear, and this is years ago, people using different addresses because maybe they say, in a certain area, a certain zip code that was rated very high, and insurance, homeowners insurance, and especially auto, was very unaffordable. So they might use an address or UPS or mailbox, et cetera, address in a different locality and make it appear that they were actually living at this address to lower their insurance costs. Is that considered insurance fraud?
It absolutely is considered insurance fraud. And what happens now a lot is carriers will ask to provide evidence of that address, meaning they're looking for a DTE bill. They're looking for you to show that you literally are at that address, whether it's you have to show that you just purchased the home. So you're showing documentation of your homestead, or if you are a tenant, you're showing proof of a lease. But yeah, I've had to have customers show a utility bill, and I sent just the front page of the utility bill, and they were like, nope, we need all pages. So insurance companies are getting, wanting that documentation to confirm proof because of the insurance fraud being done based on someone utilizing someone else's address. The mail goes to that address, and then it miraculously comes back to the insurance company. They'll send you a notice. And then, of course, every renewal, they run your driving record. So they're looking at, what does your license say? All of those things matter. And at the end of the day, what that can do for someone is, if you have a claim and all of these things have happened, they could deny that claim. And when they deny it, they return your money. They're like, we're not paying for that claim. Here's your money. And, that's basically what it is, a misrepresentation, fraud. So yes, those things happen. And unfortunately, I wish there was something else that could be done to eliminate that so people could just have coverage.
I want to know why the insurance company denies the claims and then returns the premiums when they knew all the time they collected the premium that person did not stay there, or this was not a residential address, because they got the technology and the systems to be able to determine where the red flags are and who's staying. Like, it's easy for me as a real estate investor to find out where someone stays. So I know they have the technology, being in part of the Secretary of State databases and all that good stuff. So why even collect the money and then return it back at the sign of a claim when they could just even easily deny it, say, no, you don't stay there, the policy is canceled, go find some insurance elsewhere?
So again, I think each carrier is a little different. They do now have departments that does audits immediately. And if you don't supply that information, they'll cancel, re-rate it, whatever it may be. I can't speak as an industry, why it's not, just standard to do that. But there are carriers that I work with that do upfront audits. And if you can't provide that information as relating that audit, they will cancel you for sure.
Okay. Yeah, that auto insurance is a big deal, especially in Metro Detroit. Inside the city proper, there's a lot of red line and just the insurance, people are paying more in some cases for their auto insurance monthly than they are paying for that car note. And it makes it very unaffordable. So how come auto insurance is extremely high in Michigan, and then in states like Ohio, which is, 40 minutes away, it's very, very reasonably priced?
Yeah, so part of Michigan's expense with auto is the personal injury protection, the PIP. Don't get me wrong, the comprehensive and collision is also high, but the personal injury protection is not something that you see in every state. Ohio does not have PIP. So that's why Ohio rates are less. And for Michigan, we've had PIP for as long as I've been a driver. And so what that does, though, is it pays for injuries related to an auto accident. Up until 2020, we only had unlimited PIP. That's all you could select. And so if you had injuries, it paid for a lifetime because it's unlimited. We still have unlimited PIP, but they made some changes in an effort to lower rates. And we now have unlimited, 500,000 and 250,000 for PIP, meaning that that's your maximum, 500,000 or 250,000. All of those things, they drive rates because it's related to injuries. So that's hospitalizations, that's rehabilitation, anything related to that auto accident. If that person now has to have a caregiver, that's what PIP will pay for when it's unlimited. When you take the lesser amount, you run out at 250,000, you run out at 500,000. It drives rates. It makes the rates high because, again, you're paying for something that could happen, that does happen, and we have people on PIP right now. But that is one of the driving forces behind why we have such high rates in Michigan, period. And then, of course, in Detroit, our rates are high because of, people being uninsured, getting into accidents, theft, vandalism, all of those things drive rates. So it makes it even higher in, I'll say, Wayne County.
So with the PIP and Ohio not having PIP, am I to assume if I'm in Ohio or Ohio drivers get into an accident and there's an injury, the only recourse or the only insurance provider is that driver's health insurance? Outside of that, the auto insurance doesn't pay to any of the drivers or auto accident victims any of their health care costs.
So don't get me wrong. Like the other states, including Ohio, they do have auto coverage. I can't speak to exactly what the amount of coverage that they have for that, but they do have coverage that would protect them if they're in an auto accident. The reason why Michigan has PIP is just unknown to me because there's so many states that do not have PIP. I want to say Michigan is like one of 3 states that has PIP. So other states are able to do it. What it would take for us to do it, I don't know. But I do know that is a driving force behind auto insurance. And then, like I said, the comprehensive and collision, that's when you have full coverage, is also extremely high. And it's high because it looks at, well, what happens in this zip code. And so it makes it even higher.
Okay. So recently, the state of Michigan the insurance company started asking for something from individuals' health insurance policy to state that they would pay in an instance of an accident. Explain to us what's that about.
Yep, that's part of PIP. So if you have Medicare, Medicaid, or what they call a qualified health coverage through your employer, you can submit that, and then your PIP is based on the type of health coverage that you have. So, for example, with Medicare, you can opt out of PIP because Medicare already takes care of injuries. No matter how you have those injuries, Medicare will pay. So therefore, when they made those changes to PIP, they said, okay, well, since Medicare is going to pay, if a person has Medicare, they can opt out of PIP. Well, they opt out of PIP, and that helps bring their rate down. With Medicaid, you have the opportunity to have $50,000 in PIP, meaning it's almost like a coordination between Medicaid and that insurance carrier. So they know the PIP is going to be up to $50,000, and Medicaid is going to take care of those injuries as well. And then individuals whose employers have opted to have a qualified health coverage plan, they're saying the same thing, is that we're going to take care of those injuries related to an auto accident. However, the only way you can ensure that you have one of those PIP selections is you must provide proof to any healthcare insurance carrier. So basically, if you have Medicare, you have to provide a copy of your Medicare card to your insurance agent. Medicaid, same thing, copy of the card to your insurance agent. That letter, you have to get that letter from your health carrier through your employer, and that letter must state that you have a qualified health coverage plan or benefit in order for the auto insurance carrier to opt you out of PIP and utilize one of those selections. If you don't have insurance, you can select unlimited PIP, 500,000 PIP, or $250,000 PIP, but knowing that unlimited is going to give you the most, it is also going to cost the most. So those are the things that they changed back in 2020 when they made these different PIP options. Is it helpful? Does it give some relief? Sometimes, but I also find that people are even more confused now about coverage because of all of these options.
Yeah, I used to, no-fault insurance has always been big in the city of Detroit, especially, growing up as a kid and just starting driving. Insurance is so unaffordable. A lot of people I knew, their parents gave them no-fault insurance, right? They didn't have, new cars, or maybe the cars was paid for, so there wasn't that full coverage requirement. And I used to remember people getting in accidents and hearing that no fault would cover their medical expenses related to that accident forever. So how you think, no fault insurance, people just got it just to get their tab to be renewed, and they would let their insurance policy lapse. Actually keeping that policy in force really protected that any occupants of the vehicle, because if anything happened, it would ensure that they would be taken care of for life. So that's physical therapy,
Yes.
recurring doctor's appointments, or whatever. So you're saying in 2020, then they really trying to dial that back, because what I'm assuming there was a lot of healthcare costs associated with that lifetime PIP.
Yes.
And they wanted to reduce those options for people.
Absolutely. And part of them saying, oh, we'll reduce it is we'll give you a lower rate. But ultimately, yes, unlimited is where you want to go. And unfortunately, because of the cost of it, it's not where a lot of people, it's not what they have. They selected to, one of the other options, to opt out or to take a lower PIP, and like I said, it just causes a lot of confusion, and I want to make sure that people understand. Like, I get it, you want a lower rate, but I want you to understand, if something happens and you take this $250,000 PIP, that's what you have. It's $250,000, and once you max that, that's it. So, people are choosing to take those lower limits because they just want to be legal driving their vehicle on the road to prevent any other costs that come with driving. So it's something that I would definitely like to see some changes on, because it's not helpful. It's just not. It's a lot of time and energy and, explaining it to people. And I still know that they are not fully grasping what this really means.
Yeah, because they so busy trying to figure out how they going to save some money, But what you're saying is, if I have a qualified health plan, then an insurance company is requesting me to send that letter over, then I should send it, but still tell them I want unlimited PIP, because I really don't want to take advantage of I shouldn't take advantage of the reductions that I'm getting, because this is by far the best coverage should something, bad happen as far as accidental and injuries.
Yes. So on that qualified health plan letter, it even lets the employee know that although this option meets the state requirement, there are other additional coverages that you would be missing. So, for example, I mentioned, having a caregiver, or what they call attendant care coverage. They're letting the employees know that we don't cover that. Now, maybe this person or employee has additional benefits through their employer that could help them, like long-term care or, something of that nature. But they are letting them know that, yes, it meets that requirement, but there is a portion that is not going to be covered. And again, people are like, okay, that's fine. I want this PIP lower to lower my price. So that's what ends up happening.
So if money were no issue, you want the unlimited PIP.
Correct.
Understood.
Correct. Yep.
So between the home and the auto, we haven't even talked about the life insurance. There's just so much.
Yes.
Right? A person may not be able to afford life insurance because they're so busy covering their car with the unlimited PIP.
Yes. No, that's absolutely correct. It's absolutely correct. And so I find that I'm in the position of letting people know, like, I get it. Like, of course, you would love to have a life insurance policy that has a permanent death benefit, as well as something that could build cash value. But those policies are going to cost more. And based on what you're paying in auto and home, you don't feel like you can afford it. But don't let that stop you from not getting any life insurance. And that's the conversation that I have with people, because it's important. Like, people, yeah, well, if I die, I don't want no one benefiting off of me. And, people say that, but a lot of times they're just using the money to bury you. And so taking that burden off of people is important, because, you die on a Monday, the 1st, and they can't bury you until the 31st because they had to, collect money to do it. And that's unfortunate. And I want people to be able to feel like they've taken the burden off of their children or other family members by at least having something in place. And typically that something ends up being a term policy, because it's less expensive compared to a whole life policy or an index universal life policy where you can build cash value and your death benefit can also grow. People got to get the basics first before they can navigate over into, I want to create this legacy. I also want you to create a legacy. But if you don't have nothing at all, how is that helping towards creating that legacy?
So you got to crawl before you can walk. Right?
Absolutely. So that's a conversation that I have with people a lot, just getting something. A lot of times when you get a term policy, because it is just that, it's for a term, 10-year, 15-year, 20-year, 30-year. But during that term, a lot of carriers allow you to have some type of insurability so you can transition into another policy. And I would go that route first instead of doing nothing. I would love to see where I am in 10 or 20 years to transition to a policy where I know I'm going to have to pay more a month, but I also know that policy is going to build some cash value and help create a legacy. But first, if I have at least this term policy, somehow if I can, every year you get older, the policy goes up. So if I can somehow have some type of insurability that will help me transition into a better or, a more permanent policy, I would rather take that option now. And so that's part of what I'm trying to help people understand. The term is not supposed to be there for that permanent death benefit. It's in a crunch to help you. A lot of times people who are maybe business partners, they'll get term policies on each other. Or you can even use term policy kind of like mortgage insurance. So, a young wife and a young husband, they both get a 20-year term policy. So God forbid one of them dies, then they can pay off the house. And so the one that lives can continue on with their children. So things like that are important because maybe right now you just can't afford to pay $300 a month on a permanent death benefit versus $20 a month.
Yeah, that definitely makes sense. And really having somebody that can educate the consumer, the client, because people only have like so much money, right, that they can allocate every month. And to be able to educate them on how to spread it around and the coverages that they must have versus the ones that they would like to have, that's a lot of value in that. So I'm sure your clients, Letitia, appreciate that because this is, it just seems like words on the paper, but this is, it's a lot of thought that goes into it, and you don't want to not be covered, right? You want to make sure you got enough personal property, enough liability, and, I've heard of people that get into accidents on purpose. Like you got a nice car, somebody might hit you just so they can, do some type of insurance scam or somebody else might, decide to slip on your property even though they knew there were ice there because they just wanted to get some money. So we definitely got to make sure that we're covered.
Yes, agree. And, I love working with seniors. A lot of times they have questions, and don't get me wrong, everyone has questions, but I love working with them because I find that, answering their questions, helping them, being patient is oftentimes what they need. Because in today's society, everything is just quick. Even how we get insurance policies now, everything is, a e-signature. And so with seniors, oftentimes that is something that just gives them pause, because, they use technology, but maybe not to that extent that they know how to do the e-sign right away. And so unfortunately, I feel like, their questions, their concerns are just being pushed aside just to sell the policy versus making sure they understand what their coverages are and what they need.
Yeah, I totally agree. we talked about it earlier with the nomenclature. I think some insurance agents are really just about the sales and the numbers. The education really comes last. And if a person, like a senior citizen, is maybe a little hard to hear, slower to understand, that's going to take more time, and they're going to make the same amount of money as if they,
Yeah.
So they're less invested in that time that it takes to educate that person. So, I want to applaud you for actually taking the time, and because that's our most fragile population.
Yes.
And theoretically, they're in the years where their income is is a lot smaller than it
Yes.
was when they were working. So every dollar matters. So to make sure that they're putting it in the right places makes
Yeah, no,
a big
thank
difference.
you. Yeah, no, I agree. And then there's ads that are specifically targeting seniors and telling them, call us or click here and get your policy for $30 a month. So in the insurance industry, there is no carrier that can tell you up front that your insurance is going to be $30 a month. Anytime you see something like that, that is a marketing ploy. That is not by a carrier. That marketing ploy is to get your information and to send it out as a lead to all other carriers. I've had people call me and say, well, yeah, the ad said $30, and if you can't get it for $30 a month, I don't want a quote. Well, unfortunately, in order to give you a quote, I have to walk through your information. It's based on you, your age, the type of vehicle you drive, the zip code that you're in. Like, every senior isn't riding around in a 2020 Pontiac Grand Prix. That it's gonna be different, and they all don't live in the same location, and so I have customers who talk to me about that, who call me. My own mother will call me and tell me about ads that she saw, and knowing I take care of her policy very well. And I have to explain to her, just like anyone else, like, yes, that is just marketing. Do not respond, do not click, because once they have your information, they're sending it to multiple carriers over and over and over again. They call them leads. If it's 6 months later, they call them age leads, but they just continue to sell it. And so people, it's like you'll never get off that hamster wheel of someone calling you, texting you, because you clicked on that marketing to get lower insurance.
I mean, $30 a month sounds good to me. I probably would click on it too.
Yeah, it's not real. It's not real. It's not real. But don't get me wrong, you might find a great rate, but I'm telling you, anytime you see something that's advertising, we can get you insurance as low as, they're not insurance carriers. They're marketing people.
Yeah, they're just trying to fill a funnel of leads
Yes.
and sell it to somebody else who's going to sit there and quote you $3,000 a month.
Correct. Yes. Yeah. Yes.
So this business insurance essential. Talk to us a little bit about that. Business owners need insurance as well. It's like you need insurance for everything. You need insurance to live. You need insurance to die.
Yes.
I'm in the wrong industry, y'all. I'm in the real estate business, but I should have got into the insurance industry.
Yes. So as business owners, it's important to have that coverage. Someone walks into your establishment, or even if you have a business at home, your products, what you do, anytime, someone takes a bite and they say it broke their tooth, that's a claim. So you always want to be covered to protect your revenue. Without insurance, you essentially would be paying out of your pocket for claims. People make claims all the time. The coffee's too hot. That's a claim. So you have to it's like hand in hand. If you're in business, you have insurance. If you're in business and you don't have insurance, you won't be in business too long because too many things happen. So as a business owner, if you have what they call a brick and mortar, meaning you own a building, so you have property in that building and people come to that establishment, you are going to have what's called a business owner's policy. That business owner policy is going to include coverage for your building, coverage for your furniture. It's going to include the liability coverage that you need to protect you, against losses of theft, fire, whatever it may be. That would be a full business owner policy. Typically, if you are a business person and you rent at a location, well, you're definitely going to have general liability, and you may also want some property coverage. So you can do it a la carte, or it may be better for you to do a small business owner policy because you are actually in an establishment where, of course, you need liability for slips and falls, but you're protecting your furniture and all that good stuff. If you are a restaurant and you deliver, you're going to need some commercial auto insurance as well, which can be part of your business owner policy. Or if you are a individual truck driver and you contract with people, you need a commercial auto policy to protect you as well. So there's so many types of businesses. And like I said, even if you work from home, it is in your best interest to have a business policy because your homeowner's policy will have limited coverage for a business. And whenever someone tells me they have a business at home, and this is part of the application process for any homeowner, it wants to know if you have a business at home, because what they're trying to see is, do you have people coming in and out of your home? Because that's a higher liability exposure if you have people coming in and out of your home for your business. So it's definitely something that you should talk to an insurance professional about, like myself, to make sure that you are properly covered.
Yeah, you said a mouthful. There's a lot. Like, you got to fill out an application for each part and then have a consultation about each aspect of it. This is all encompassing and just so abundant.
Yes.
And then yet so needed in every aspect, because you don't want to shortchange yourself. Because like you said earlier, they will deny a claim in a heartbeat if they can see that you operating the business and you trying to claim this on your personal homeowner's policy. Man, I'm sure a lot of people have had to deal with those denied claims, and they weren't happy about it. So it makes sense to do things the right way, get the right education, and make sure you got the right coverage, because ultimately, the only person you're cheating is going to be yourself in the long term, should you have a claim.
Absolutely. One thing I want to mention too is, and I do pet insurance as well, but like, for example, I can see in the industry where change happens. So some years ago, dogs were covered under a lot of policies, but over the years, there's been so many claims for bites that they no longer cover the dogs on the policies. So, for example, it'll want to know, do you have any pets? They'll even sometimes ask about exotic pets. But as soon as you say yes, and they'll ask you what type of breed of dog that you have. And then the next thing it says is, it's not covered, regardless of the breed. Now, historically, it was like certain breeds weren't covered.
Pit bulls or Rottweilers.
And so over time, it just continued to evolve because, it's not just the pit bulls that are biting. All dogs are biting, and
they all got teeth.
Yeah, they all got teeth. They're biting. And whether it was biting an actual person or biting another dog, people were making claims, like their dog's getting into it at the dog park. Now I'm suing your insurance for that. And so insurance companies have started to remove that coverage from the policy. period, because of that. And so that's just one thing that I saw literally, change in a matter of a few years.
How do people insure or try to file a claim against another person's insurance company? How do they get that information? Because it's not like public record, right?
Correct. It's not. Typically, what's going to happen is anytime you're filing a claim, like accident or those bites and things like that, car accidents, you're filing a police report. And then from there, it just kind of spirals, because on that police report, it's going to have that information that maybe they didn't know exactly what your name was. Well, now they know your full name, your address, and probably your driver's license number. And so from there, that's how they'll turn it into their insurance company.
And they'll do the
insurance company will do the due diligence. Yes.
Gotcha.
Yes.
I always wondered that, like, how will they know? Because I'm not going to give it to them.
Yeah.
You say I want to file a claim against your insurance policy. I'm not giving you anything.
Yeah, that's how. I've had, customers say, how did they file that claim? I didn't even know. Well, yeah, did you have an accident? Yeah. Was there a police report? Well, the police didn't come on the scene. I said, but do you know if there was a police report? Yeah, there was a police report. Well, that's how. From there, they filed it to their insurance, who is now turning to your insurance and say, you owe us for this claim, and your party is at fault. So you owe us now. So yes, that's exactly how it happens.
Okay. Things are becoming more clear now.
Yes. So yeah, I like I said, I love what I do. I love educating people. I'm here to review. I'm one of those people, I will tell you if what you currently have is in your best interest. I'm not going to say, oh no, you just need to switch to me. That wouldn't be me doing what I'm here to do, which is to educate and help people. So if you have a policy that's better and it's doing you service, I'm going to tell you. But I'll also tell you, hey, make sure you come back to me at your renewal and I can check and make sure that policies continue to serve you as it should. So yeah, that's me. That's what I do, and I love it.
Yeah, so you talked about the reviews. I think a lot of people, they get comfortable with their agent, their agencies, and they just pay the premiums year after year after year. And sometimes they might be paying, 20-30% more than what they could be paying had they gotten a review. So I'm big on getting those policy reviews at least annually, but even sometimes every 6 months.
Yes.
Because I want to save every penny that I possibly can.
Absolutely.
And make sure I got the maximum benefits. So, Letitia, tell the viewers how they can contact you, how they can reach out and take advantage of your services.
Absolutely. So again, it is Letitia Moore Agency. I am a farmer's insurance agent. You can reach me at 248-823-6688. And I am also, you can find me on Facebook at Letitia Moore Agency. I am in Troy. And like I said, I love working with people, seniors, families, just helping people understand insurance and making good options for them.
Home, auto, life, as well as business insurance. You got them covered.
Yes.
Fantastic. Well, I definitely appreciate you joining the show today. I mean, I know I learned a lot, and going to make sure we stay abreast on the changes of the Michigan laws as long as we stay here paying these exorbitant insurance prices. But it is what it is. We got to pay, right?
That's right. That's right. Until some type of reform is done, for sure.
Contact your legislators.
That's right.
Well, once again, y'all, thanks for tuning in with this episode of The Long Report. Be sure to share, like, and subscribe to the channel, and we'll see you soon. We out.